Yeah, that is exactly what it is. It's also ironically happening in similar scale at the exact same time in the private credit market, where again, it all boils down to trust, lack of trust, trust of our institutions, trust of our markets, trust of our political structure, trust of everything. And yes, that is exactly what is happening. That's why people tell you there is no really there's having physical possession. It eliminates the counterparty risk that is growingly pervasive in everything these days in markets where you know old rules don't really apply as much as they were. And all of these things, whether it be a run on Comex or a run on the banks, are reminiscent of one thing: a Ponzi scheme. A Ponzi scheme where you issue more paper than there are bars
Right.
or
More,
shares
more,
of a
more claims
certificate.
than actual
Yes,
collateral.
yes,
Yeah.
and that's exactly what it is across the board. Or you leverage yourself too much in private equity and sell it based upon liquidity that when everyone comes at once, it doesn't matter what market you're talking about. If it's over leveraged or over rehypothecated, when everyone comes at once, you have a problem.
Let's all hope that this war is over swiftly from here. If it is, I'm curious what you think the reaction to the precious metals will be. I can certainly make an argument that some of the things that have been suppressing them during this time, like countries having to sell their gold to fund the high oil prices, if oil prices do come down after the war ends, you could make an argument that that will return a bid to gold. But don't let me put words in your mouth. What are you expecting?
Well, that would be the conventional wisdom, because then, oh, they're going to lower rates again, is what they would say. So that's so friendly for gold. It's so nonsensical to me, Adam, because, it's a convenient omission for them to say, well, gold went up parabolically in the face of the strongest interest rate increase in history, right? They forget about when rates were rising, gold was doing well. What this is in essence Gibson's paradox, which speaks to the inverse relationship between real interest rates and gold. That is the underlying theory there. And it's nonsense because I think one thing that Gibson's paradox needs to take into account is trust. Again, back to trust. Mm-hmm. If the United States were truly trusted globally and there was organic demand for the U.S. Treasury and everyone wanted to be here, well, yeah, then that's true. A high interest rate that says, let's say 7% yield on the Treasury. That's strong, right? Well, that says the rule of 70 seconds, the mathematical law says you take 7 into 72. In 10.2 years, your investment would double. Okay, so that would be great if the dollar in the United States was revered and trusted. But when money creation and inflation is running much higher than that, the dollar lost over 10% last year in the dollar index, you would actually be negative real return. But that's besides the point. My point is simply this, that does it really matter to the people accumulating gold that interest rates go from, 4 to 5%? Maybe to some it does. To the talking heads it does. It doesn't matter for most people accumulating gold because their reasons are far past what 1 or 2% interest rate to a dollar that is losing far more than that each year is worth. And the dilemma for the people reporting on this is that the statistics that they use to measure things like the CPI mask the reality. So you have to be able to separate yourself from, I think, the way things always were and the system that is built to hide and mask an inflationary agenda, and then take a step back further and say, could we really be nearing the end of the dominance that the United States empire? And again, I don't mean to be such a buzzkill this morning and sound as though it's over, but there is a fine line between realism and pessimism. And I thank God every day I live in this country and I am a patriot and I love this country, but we are nearing the end. It's all about mathematics and it's about trust, and both of them aren't looking good right now. So to me, a slight uptick in interest rates in that environment is nothing. Bring us back to 1989. and say that environment. And I'd say, yeah, that's pretty substantial. Who's going to want gold if rates keep rising in this country where everyone wants to be here and be invested here and yada, yada, yada. Not so much right now. In first day notice for April deliveries showed that 10,138 gold contracts stood for delivery. That's 1,013,800 ounces of gold. And 1,181 silver contracts, that's 5,905,000 ounces of silver were posted for delivery. And, if we look back at the March numbers, Adam, we see there were 14,559 gold contracts delivered, which obviously a lot of gold, 1,455,900 ounces. And 9,212 silver contracts, 46,060,000 ounces. This is the question that, in my mind, has been missed completely and totally by the mainstream. These are not trivial numbers. You're in the billions and billions and billions of dollars every single month. A lot of it leaving COMEX. A week ago, Friday, I believe, we saw 2 million ounces leave the eligible category. Those aren't even for sale. Those aren't even bars that are posted. That would be like someone taking 2 million ounces out of our storage program in 1,000-ounce bars, which is an eligible category, Brinks JFK, New York, and taking physical possession of them. So, how much does 2 million ounces weigh? I mean, I'll ballpark it for you. You're looking at, ballpark, about 168,000 pounds. So, when you realize that in February we talked about almost 39 million ounces leaving the COMEX, getting on trucks and going, that's over 2 million pounds. So, yeah, it's continuing unabated. You look at what happened for not just here too, because you look at what happened in February after the price of silver literally got its teeth knocked in. China recorded its largest single monthly inflow of silver ever in recorded history. January and February combined were off the charts. February was the biggest single month ever. Now, this is from the second largest producer of silver in the world, who's been flying all around Latin America for the last couple of years, buying doré and concentrate from Mexico and Peru, number 1 and 3. So the number 2 producer in the world buys doré and concentrate at double what the West will pay from 1 and 3, and then is importing more silver than ever in recorded history after the price got destroyed. Price is a tool of misdirection, is the moral of the story. The price will throw you off the trail. The price will throw the media and the talking heads off the trail.
Before we wrap up, let's zoom out for a second, because what we're watching right now is bigger than one headline, one candle on the chart, or one day of price action. This is not just about silver going up 50 cents, or gold pulling back after a strong move. This is about something much larger happening in the global system. We are living through a period where trust is being tested everywhere. Trust in governments, trust in central banks, trust in currencies, trust in debt markets, trust in the headlines, and honestly, trust in the idea that the old financial system can keep running the same playbook forever without consequences. And that is exactly why gold and silver matter. A lot of people still look at precious metals and say, why would I care about silver? Why would I care about gold? They just sit there. They do nothing. They have no yield. That is the old argument. But the world we are moving into is not the same world that argument was built for. Because in a world of rising debt, geopolitical instability, currency debasement, weaponized trade routes, sanctions, proxy conflicts, fragile supply chains, and central banks trapped between inflation and recession, the thing that just sits there starts to look very powerful. Gold does not need permission. Silver does not need a bailout. Neither one needs a central banker to reassure you on television. And that is why every serious conversation about the future of money eventually comes back to hard assets. Now think about where we are today. Global tensions are not fading away. They are multiplying. The Middle East remains a pressure point. Europe is still dealing with long-term strategic instability. Asia is becoming more economically and militarily competitive. Energy corridors matter. Shipping lanes matter. Semiconductor supply chains matter. Food security matters. The dollar system matters. And every time one of these things gets shaken, markets start repricing risk. That repricing of risk is where gold usually gets the first spot. Gold is the monetary metal. Gold is the one central banks understand. Gold is the one they quietly respect, even when they publicly act like fiat is invincible. But silver is different. Silver is the metal that lives in two worlds at once. It is monetary, but it is also industrial. It is history and future at the same time. It is old money and modern technology in the same metal. That is what makes silver so interesting. And frankly, so explosive when momentum finally builds. Because silver is not just a shiny rock. It is used in electronics, solar infrastructure, industrial systems, advanced manufacturing, medical applications, and more. So when the world talks about green energy, electrification, reindustrialization, military tech, grid expansion, AI hardware, and supply chain security, silver is sitting right in the middle of all of it. That is why silver bulls never really go away. They may get mocked, they may get early timing wrong, they may have to sit through painful consolidation, but the core thesis keeps coming back because the metal keeps mattering. And let's be honest, silver has a personality that gold does not. Gold moves like a king. Silver moves like it just drank 3 espressos and saw a breaking news alert. Silver is calm until it isn't. That is why silver drives people crazy. It can look asleep for weeks, and then suddenly it moves like the market remembered all at once that above ground supplies are tight, demand is real, and the paper game only works until confidence starts slipping. That is the part many casual viewers miss. Most people only become interested in silver after it already made the move, after the breakout, after the headlines, after the FOMO starts, after the mainstream financial channels begin pretending they always understood the story. But real positioning usually happens when nobody is excited, when the comments are quiet, when the chart looks boring, when everyone is distracted by the next hot trade. That is how these markets work. And the geopolitical side only makes this more important. Every new conflict, every new sanction regime, every new currency settlement outside the dollar system, every new shipping disruption, every new defense escalation, every new energy shock adds stress to the financial architecture. Maybe not enough to break it in one day, but enough to weaken confidence over time. And markets run on confidence. That is the key point. The system does not need to collapse tomorrow for metals to matter. It only needs people to slowly realize that the system is not as stable, not as neutral, and not as durable as they were told. That is when gold becomes a signal. That is when silver becomes a story. And that is when retail investors, institutions, central banks, and everyday savers all start looking at the same assets from different angles. Some buy gold because they want security. Some buy silver because they want leverage to the same macro trend. Some buy both because they do not want all their faith sitting inside digits on a screen, backed by policy promises and political incentives. And can you really blame them? Look around. Governments keep spending, debt keeps rising, currencies keep getting diluted, wars keep threatening trade, politicians keep promising stability, and ordinary people keep noticing that their money buys less than it used to. That is not conspiracy. That is lived reality. This is why gold and silver are not just investments to many people. They are a response, a hedge, a form of skepticism, a statement that says, I do not fully trust the system, and I want something outside of it. Now, does that mean metals only go up? No. Does that mean silver cannot be volatile? Of course it can. Does that mean gold cannot correct? Absolutely not. But zoomed out, the bigger picture is what matters. Precious metals do not need perfect conditions. They need persistent stress, and the modern world is delivering plenty of that. That is why, on this channel, we do not just stare at price charts in isolation. We connect the dots, because silver is not trading in a vacuum. Gold is not moving in a vacuum. Markets are reacting to debt, diplomacy, war risk, central bank behavior, inflation expectations, real yields, industrial demand, and public psychology all at once. That is why one random headline can move these markets. That is why one central bank statement can change momentum. That is why one geopolitical flare-up can turn boring metals into the most interesting corner of the market overnight. And this is where the memes almost write themselves. One day the mainstream says, nobody needs gold anymore. Next week, central banks are stacking it. One day people laugh at silver holders. Next week, they are posting rocket emojis after a $2 move. One day, analysts say inflation is under control. Next week, your grocery bill files an official complaint. That is the clown world element of markets. You can almost picture the meme. Fiat currency after another trillion in debt spending. I'm tired, boss. Or this one. Silver investors after waiting for months and seeing a 4% move. Everybody stay calm. Everybody stay calm. Or the classic energy of the metals crowd. They called me crazy at 22 silver. They called me lucky at 32 silver. They called me again at 40 asking what to buy. That is the emotional cycle in a nutshell. And if you want a few tweet-style lines to flash on screen during this segment, here are some that fit perfectly. Gold is not chasing the news. It is pricing the loss of trust. Silver is what happens when monetary anxiety meets industrial reality. Every empire prints. Every market pretends. Gold remembers. Paper promises are infinite. Real metal is not. Geopolitics is bullish for uncertainty. Uncertainty is bullish for hard assets. Central banks buy gold while telling you everything is fine. That should tell you enough. Silver does not move when people are comfortable. It moves when comfort breaks.